So we are on the live charts right now on the 4-hour. As you can see, price was in a bullish trend. And after the bullish trend, price broke this trend and started to form series of lower lows and lower highs. So this means we are in a bearish trend right now. Okay, in a bearish trend, as we know, price will form supply chain. So supply zones over and over again being respected. This is a supply chain. Okay, let's find the supply zones. First, map out our structure. As you can see, we had the last high point right here and the last low point right here. Price broke structure to the downside with this movement, inefficient movement. So first criteria is fit because it broke structure to the downside here. Second is fit because it created inefficient movement. And the third criteria is fit because it swept liquidity. We have liquidity here. So price just swept that liquidity. And as you can see, price levitated back up to this supply because this will be our right supply zone. So price levitated back up to this supply and reacted on it. So I will just mark the structure. Price is currently moving in this range. We have a high and a low. As soon as price breaks this low point, it will create a break of structure. So one of the three criteria will be fit. Okay, let's see what will happen. It's moving in the range. Okay, it created inefficient movement, but it didn't break below this low. As you can see, this is inefficient movement. Okay, it broke below the low. So we have a new supply zone because it created inefficient movement, break of structure, and actually it didn't sweep any liquidity, but this is a really huge inefficiency. So this will be a valid zone. So let's just mark out the candle. We are waiting for this candle to be tapped or the last low to be broken. So this is our last low and this is our last high right now. As soon as this low breaks, we will create a break of structure and we will more likely to have another supply zone. Let's see what happens. Okay, as you can see, price created another inefficient movement to the downside and broke structure. So this means we have another supply zone, which is up here. Okay, let's play price. Waiting for a pullback. Okay, the pullback happened. So we are currently moving in this range. As soon as this low breaks, it will create a break of structure to the downside and will form a new supply zone. Wait. Okay, as you can see, price created another break of structure to the downside. So we have a new high. Sorry, we have a new high here and we are waiting for a new low. And this means we have a new supply zone also. I will use the wick, but I will explain later why did I use the wick in the wick explain video. Okay, let's just continue. As you can see, price created a new low, which is right here. We are waiting for a pullback. Price tapped the zone. Price reacted on that zone, created inefficient movement to the downside, but didn't break below the last low point. And it broke below because all of these breaks were just wick breaks. So I will count this as a real break structure because it broke below the zone with body closer. Okay, let's just mark out this zone. This will be our new supply zone. And this method gives on and on over and over again. You can mark out supply zones and demand zones based on these three criteria: inefficiency, break of structure or change of character, or opposite side zone break, and liquidity sweep or collect. Okay, let's see a demand zone example. Okay, as you can see, we are on the 4-hour chart again, and price is in a clear bullish trend because it's creating break of structures to the upside and forming series of higher highs and higher lows. So this is a clear bullish trend. Okay, before we continue this, I will ask you to watch the weak zones video because you will need it to complete this task. And actually, I will give you your first task. I want you to mark all of the demand zones out on this structure. I will give you 1 minute for this task. Let's begin. So the 1 minute is over, and as you can see, I drew all of the zones that has at least 2 criteria: liquidity collect, breakout structure, and inefficiency. Okay, let's check them out. As you can see, this is our first zone. We call it as an extreme zone because it was the start of the whole order flow. Okay, this zone changed character here and here, so this will be valid because it created inefficiency and swept liquidity. The next zone will be this one because it, as you can see, created inefficiency. It has a gap between the wicks and it broke structure, broke this structure. Okay, the next zone will be this wick zone because it created inefficiency, huge inefficiency, broke structure to the upside, and collected liquidity from this region. As you can see, here's another zone, this small zone, because it created inefficiency to the upside, broke structure, collected liquidity. Price reacted on this zone here and just broke below a little bit. But after the broke below, price created this demand zone again, broke structure to the upside, created inefficiency, and it didn't collect any liquidity, but it will be a valid zone. After this, price broke structure to the upside here with this candle, created inefficiency, and swept liquidity from this region. Okay, let's move on.